Today I would like to talk about a very interesting company named Niu Technologies, and they sell electric rollers and electric motorbikes, as you can see here. So they have very interesting products because this is a growing market, obviously, because the world wants to be more electric. So it's a very interesting company. And when we look at the stock price, we can see 6 months it didn't happen much. It's up about 10%. But in 1 year it's down 50%, and in 5 years it's even down 76%. And from the all-time high, it looks even worse. It's close to 95% down from the all-time high. So this could mean this company is right now very cheap, or it has a reason why it's so cheap. So maybe it can go up again. So this is a very interesting company. We have to take a look at the financials to know more about it. The first thing we notice is a small market cap of $142 million. So this is a very small company. So it can mean we have a lot of room to grow. And it's also interesting business because this electric roller and motorbikes is a growing market. So there's a lot of potential to grow. So this is a small company and it has a lot of potential. So if we take a look at the financial foundation, the first thing we are looking for is revenue growth. We want to invest in a growing business. So if we take a look here, we can see in 2019 it was 300 million, and in 2023 it is now 374 million. So it did grow over the 5 years. But we also can see here that in 2021 it was the highest with 574 million, and then it did decline 2 years in the row. So it's still a check here, but we can see it also declining the revenue now. The next thing would be free cash flow growth. So especially for a young company like this, it's very difficult to be profitable already. So we cannot expect much of free cash flow here, but actually they were profitable in 2019 until 2021, and then they did become unprofitable, negative free cash flow. And now in 2023 they had a little bit free cash flow. So actually it's a decline, but it's not looking so worse actually. So it's not a check here, but it's not too bad. So if we consider they will do better in the future, then the free cash flow could become positive again, and we have the growing free cash flow. So the next thing would be free cash flow yield over 4%. So they have their very small free cash flow, and we can calculate this as well. So it's 2 million divided with 142 million, and this stands about 1.4%, and that's not much, but it's a small company, it's a growing company, so we don't expect that much. So also if we consider that they had a very good year in 2020, this would be a lot of free cash flow. So if they can turn back to this time, to the better free cash flow, this company can be very profitable. But it's not a check here right now. Normally, I would like to see the debt to free cash flow ratio under 5. This means we can pay back the debt in under 5 years with our free cash flow. But of course, this is a growing company and a very small company, so we cannot really expect that. But instead, we will just look at their cash and at their debt. So we will see if the company has difficulties to pay the debt. So we can see here they have 151 million in cash. This is quite a lot. If we consider this is actually more than their market cap. So they could buy all their market cap with the money they have in the bank. But now we take a look at the debt, because this is a very important part. So we can see here short-term debt, and 38 million. It's not so less, so it's a little bit. But then also The long-term debt is not really there. So actually it's more about the short-term debt, and this is 38 billion. They can easily pay this back with the cash on hand they have. So they not really have the financial problems. So obviously if they turn more negative with their cash flow, then they could get in financial problems. But I don't see this coming soon because they have good money in the bank, so they can survive more years. The last thing would be shares outstanding decrease. We not expect this from a small company that still wants to grow, so we don't really expect them to buy back shares. Even this company could do that because they have a lot of cash on hand, so they could actually buy back shares. But we can see over the years the shares outstanding increased a little bit, not so much, but a little bit they increased. And this is not a problem, I think, because they are still young and want to grow, so I don't see the problem there, but it's not a check. My conclusion about this company is they have a lot of potential. I really like the interesting business. They're selling the electric motorbikes and the electric roller, so I think this is a growing industry and it could become more popular in the future. I also like their balance sheet. They have a lot of cash on hand and they have little bit debt. They can pay back the debt with the cash on hand easily, and they could also buy back shares if they want. But this is not very the smart idea because they probably need this cash to develop new products and everything, to invest in their own business. So the negative things for me is the CEO sold his shares. He was also the founder of this company, and we can see here over the years in 2022 he sold his shares. This is over $20 million, so this is a lot of money, and he sold his position. So I don't really like to see that because this means he doesn't really believe in this company anymore. So that's not really looking good. And I also don't like that the revenue declined so much. So I would at least see that they keep the revenue on a similar level, but the decline is also not looking great. But obviously, this company can also turn around if they make their better products, or if they sell more of the products, the revenue will go up again, and this can turn around this company and the stock price will go up a lot. So it's really depending on this company, how they can marketing and make the good products. So this will show in the stock price in the future if they can turn this around. But it definitely has a risk too, because I don't really like the revenue decline over the years, and the CEO sold his shares. This is also concerning me. So for me, it's too many concerns, but it has a lot of potential. So this stock could go up 10x or even more if the condition is good for the stock, if they do the good job. But it has a lot of risks as well. So I hope you liked the video, and please don't forget to subscribe and like the video.